Okay, great. Okay, so this is a very impromptu live trade session. Okay, and I don't know how many of y'all actually know this week is actually quite an important week. Okay, what's so important about this week? Can y'all type in the chat? All right, and I think those of you from my Telegram group, you all will be aware already. In fact, I think most of you should be from the Telegram group because I only sent this Zoom link into my Telegram group. Okay, but if you're here because my community member forward to you, welcome. Okay, very, very much welcome to join us as well. All right. Okay. Hey, I want to make sure this is an engaging session. So if you're not going to talk, then don't need to continue. Already. So what is so important about this week for markets? Okay. I don't know if you all know. Actually, the Federal Reserve is going to start their bond buyback program this week. Treasury buyback program. Okay. And they will start exactly when? Tomorrow. They are going to start tomorrow. So it's quite crazy. And they're going to buy back about $2 billion dollars of bond every single week until let me just double check. Is there a timeline to it? Okay. Right. So okay, I just share screen so that y'all can see. Okay. All right. Okay. So guys, you can see, right? So okay, this is a bit small. Maybe I zoom in a bit. Oh, okay. Yeah. Right. So you can see they are going to do $2 billion of purchase every single week. Every single week until they are done. 2 billion for close to 2 months. Okay. And I honestly don't know whether they will continue after that. Right. Now, some commentary is saying that this is actually not liquidity injection. This is actually to moderate their cash position and stuff. What they call it, like cash management, yada yada yada. Okay, but frankly, they say it's short term. But okay, if it's a short term increase in liquidity, then good. That means we're gonna see short term, still very bullish market in this case. All right, so that's why right now I'm still pretty much looking at a very bullish market. Going into maybe probably the next couple of months, right? And especially we're going to go into election season very, very soon. Less than half a year from here, we are going to go into election seasons as well. Okay. All right. So Ada is asking, bond buyback means increasing liquidity. Yes, definitely. Right. So when they buy back the bonds, they will definitely have to inject cash into the market, right? And that's what's going to happen. And if you look at the market right now, okay, let me maybe just share screen again. Okay. What should I do here? Oops, sorry. Yeah, okay. Can y'all see my screen? Can, right? Let me just check. Okay, good. All right. So you can see right now, even like Bitcoin is going up. Okay, right. So Bitcoin recently had a very, very good pullback. Right. Actually, it was very recent. It was just early this May, right? This month. Right, pull back to about 57,000, and right now we are back up to about 67,000, 69,000. So to me, this is a sign of liquidity, right? To me, this is a very clear sign of liquidity. Why? Because usually when the market is having flow of liquidity, right, it goes in a certain sequence, right? So when there's a flow of money, the first thing that it will flow into is generally your safer stuff, like your bonds, right? Okay, and then they will flow into maybe your corporate debt, right? So these are not bonds per se, but these are corporate debt, and then they will also flow into things like stock market, right? Later on, they will flow into stock market, and only the last kind of last resort, last place to attract funds is crypto. Okay, and right now we are seeing crypto having a very, very nice uptick. So to me, if crypto is increasing, there's a very good chance that basically the other asset classes such as your shares, your properties, right, is going to start increasing from here. Okay, all right. So guys, I'm just going to go through the market very broadly with you guys. Along the way, if you have any questions, just feel free to ask. I think we can do this for when do I need to go? Okay, I need to go by about 10:30. Okay, so maybe we end about 10, 10:25. Okay, 10:25. If you have any questions, just let me know. Okay, all right. If not, let me just go into the market first. Correct. So this is the standard thing that I always share with my students in terms of the broad market, right? Is that we are still currently in a uptrend situation. Okay, right? I know out there in the market, a lot of people are crying and screaming like, no, how can the market be going up, right? Everything is so bad, the economy is so bad, yada, yada, yada. Okay, so there's a lot of doom and gloom out there, but honestly, that to me is a good sign, right? Whenever there is doom and gloom, right? Hey guys, I don't know, do you all like doom and gloom or not? Type in the chat. Okay, I'm just gonna let more people into the room first. I don't know why for the life of me, I cannot disable the waiting room. So everybody just have to go through the waiting room with me. Okay. All right. So do you all like a doom and gloom situation? For me, I love doom and gloom. The more doom and gloom, the better it is. Right. So this is one of the websites that I frequently refer to. Okay. So this is the AAII, American. Okay, wait. What's AI again? American Association of Individual Investors. Okay. So basically they poll their members in their community. Right. I think it's like 1,000+ people. What is their sentiment about the market going forward? Okay. And you can see while the bullish factor is also quite high, right, because of NVDA and stuff like that, but the bearish factor is also increasing over here. Can you see that? Right? The bearish factor is also increasing. So to me, this is something that we definitely can take advantage of. When the market is very, very fearful, right? Okay, we can think about being greedy. And if you look at the fear and greed indicator, right? This is from CNN. Okay, let me just zoom in a bit. Why am I zooming away? Zoom in, zoom in, zoom in. Okay. So if you see about a month ago, right, just over here, right a month ago, we are at 41 points of fear factor. Right now we are okay we are at neutral. Right, we are at neutral. And previously, where were we? We were actually greedy, right? So it's okay, right? Because previously, we were very high, so that's why it's actually good that it came down, right? But right now, you see, we're actually neutral. In fact, 1 month ago, we were very fearful. Okay, so this is the kind of situation that you want to see in the market. Because if everybody is very happy every day, let's go, the market's going up, then there's no way the market is going to behave in that way. Because the truth is that in order for the market to function, the majority of the investors out there needs to be on the other side. I say again, in order for the market to move, the investors need to be on the other side. Why? Because the buyers tends to be the big guys. So if the street is very negative, actually it's good. They are selling to the buyers, the big buyers, the institutions. And that's why the market can move. Okay, so this is a lot of market theory stuff. I'm not going to bore you, but in short, let me just go through TA over here. You can see this is S&P 500. A lot of people keep saying, Pete, this is so high, all-time high. Now, all-time high to me is not a reason for stock market to drop. Because if you just look at the stock market, maybe here, right before COVID, we were also all-time high, right? If you look at just here, we were all-time high. If you look at just here, we were also all-time high. Now, the thing is, all-time high doesn't tell you anything, because all-time high can mean that it can go even higher, right? Now, one characteristic that I think many people have forgotten is that each time when we see a market dip, okay, so I'm just going to go into history with you guys a bit, all right, so bear with me, okay? So those of you who don't like history, too bad, okay? So you must understand the market history so that you can kind of have an educated guess about what's going to happen forward, okay? I'm not saying what I'm sharing right now is the gospel truth. Nothing is gospel truth, but if there is a sequence, a trend behind what has been happening, then it is very likely that it's potentially going to happen again. Okay, so if you see over here, right, this was the COVID period, right? So we had a massive dip. Okay, so we had a dip here, and then after we recovered, we had a very protracted uptrend, a very, very long recovery before we even start to see any near-term drop. And in fact, if you just stay invested even till today, you're positive already. Okay. But the interesting thing is, I want you to take a look at the price, right? So from here to here, right, we fell about 34%. Okay. But from the bottom to up, we are up almost 120%. Now, this golden ratio of 3:1 is fairly common. I say again, this ratio of 3:1 is fairly common in the charts. Okay, so even if you take the one before COVID, right? So let's just make it bigger. Okay, over here, you can see the dip here is about 19-20%. Okay, 19%. Then from here, we boom. Okay, right, it's about 45%. Okay, so it's not exactly 3:1, but 2 plus. 2 plus is to 1. Right, 2 plus is the 1. And in fact, over here as well, right, can you see this was the very scary 2015, 2016 double bottom dip. Wow, this really murdered a lot of people, right? Back then, I don't know whether you're investing already. I was already investing, so I know, right? That the market had a whoa, then everybody like, yay, then whoa. Okay, but that is not important anymore. The important thing is let's look at what is the price drop, right? From here, we drop about 15%, right? And then before okay, let me just pull this out a bit. Before we see a retracement, maybe we take about here, okay? All right, 15%, right? About 57%. So it's about 3+ times. So it tends to float around the 3:1 region, okay? Even if I take the 2008 bus, right? So let's just take a look. 2008 over here, we dropped close to 57%, right? If you don't count this little dip, because to be honest, this is not really a little dip. But if you just reach up to here, okay, we are about 200%. So this is about 3 plus, because this is about 60%, right? So 3 plus, close to 4, maybe 3 plus is to 1, right? So this is something as a sequence that has happened time and time again. Okay, so for now, if we just take conservatively, right, there are sometimes there is like 3+ times, and stuff like that. So let's just not assume that the bull run is going to run so far. Okay, number one is that you must recognize that the market right now has barely recovered from the previous low. Number one. Okay, that's number one. And if we look at the dip, this was a 26%, 25% dip, right? Okay. And let's just look at from here. We are only up 50%. 50, guys. 50, no? Okay. So if we just take 2 times, okay, so let me just do some math here. Okay. So if we take 25 times 3, so it's 75, right? So 75. So you see my math not very good, but it's okay. Math not good, it's okay. That's calculator. Okay. Okay. You can expect we minimally will see another increase up to about 6,200 before we see any form of retracement. Serious retracement. Of course, along the way upwards, will there be some choppy seas here and there? Of course, there will be. Okay, so that's number one. And number two is I'd like to draw projections. So if I just draw a line up and I say, okay, let me just take the average. Maybe somewhere here, and if I can intercept, right? Okay, maybe it's a bit higher. Okay, so let me just change the intercept a bit. Okay, that means we can potentially see the market continue to run till close to the end of the year. Can you see here? It's December. Right? This is December. Right? So if we can go until December, guys. Goodness. Okay. So I think this is something that everybody needs to be aware of. If there's a lot of people crying that the market is going to do well, be very mindful and ask yourself, why would it drop? As much as people will say, hey, why would it go up? Sure, but you also must ask the question, why would it drop? And if you cannot positively answer that question, right, then you must remember most of the time the stock market tends to go up. Okay, that is a very easy way to make money, right? That's a very, very easy way to make money. Okay. Oh yeah, just now I was looking at December 2025. Oh my gosh, it's even longer than what I expected. Okay, right? And I can tell you, with elections coming, right? How to say? Okay, this one, am I recording? Okay, I'm recording. Maybe I'll edit it. Okay, let me edit this part later on. I just put a clicker first. Okay? The market is manipulated. You agree? Okay? The market is manipulated. Okay? So election years, we have always seen very, very good results. In fact, you can just go and Google yourself. Election year stock market returns. Right? Okay. It's nuts one, okay? Morgan Stanley has done it before, US Bank has done it before, right? You can just go and take a look, right? So you can see almost the majority of the time we are positive for the year of election. Okay? And take note the election is this year. Okay? Right? So yeah. Okay, so will we see any change, any difference? I doubt. There's only a few years. Only 08 really happened, and that negative. Then any more negative? Don't have. Only up to Roosevelt, 1940. You know what happened in 1940? Freaking World War II, Okay. Right? So yeah. Right. That's what I'm saying. Okay. So in fact, you can find the same data set from almost a lot of different sources. You can find different data set. Okay. So that's number one, broad market outlook. Okay. All right. Okay. Any questions first? Any more questions? Okay, I got a few more minutes only. Let me share with you all some of the stocks that are pretty interesting in my view. Okay. So one of them that kind of caught my attention. Okay, so Green Tea is asking NVDA. Okay, so let's look at NVDA. By the way, NVIDIA today went up again. I think went up about another 4%. Okay. Wow, this company is quite nuts. Okay. Okay, so let's look at NVIDIA. Right. Okay, so I'm just gonna give over the top analysis on NVIDIA first. Right. So from a chart angle, very simple. I definitely wouldn't be adding more positions to NVIDIA at this point. Right. Why? Because you can see definitely not because it's on the all-time high. Like I said before, all-time high is not a concern to me. But the MACD, right, is showing a bit of overbought situation. RSI as well, stochastics as well, and even the Webby RSI is showing that it's very, very overbought. Okay, so of course, overbought doesn't mean that it cannot go even higher, right? It doesn't mean that it cannot go even higher. But what it means is that if you enter into a position right now, your odds of losing money is going to be much higher, right? So when come to investing, my personal adage is that you must look at the downside first. Okay. So I'm not saying that NVIDIA is not a good investment. In fact, if you look at valuations, right? Let's just take a quick valuations. Okay. Okay, so I like to use this website called ticker.com. If you all like it, I can share with you all my referral link. Yes. Okay, if you all join, I think I get another free 1 month or something like that. Okay, so they have a free type one, but they have a paid service. I love this website. It's very detailed. They give very, very long dated timeline as well. Okay, but let's look at NVIDIA very quickly. If you look at valuations, okay, right? If you look at forward valuation, actually NVIDIA doesn't look very expensive. Okay, it's a little bit expensive, yes, don't get me wrong, but it's not very expensive. For example, forward PE 36 times, okay, it's decent, right? Okay, towards free cash flow is about 40 times, EV/EBITDA about 30 times, right? So those are pretty decent numbers in my opinion, right? So not super expensive. The only thing I would say is that there's always a right time to buy anything, and I like to look at it from a technical perspective. That I want to buy it when I see something that's like this, right? Coming down to a support. So this is like 100 support. I like to see this kind of MACD. I like to see the RSI coming low. I like to see the stochastics coming low, right? I like to see the Webby RSI flat, right? So it tells me that it's, kind of, what do you call it? It's kind of like maturing, okay? Maturing. I can't think of a better word. The important thing about NVIDIA is that the stock split is coming up, right? Now, stock split, on a technical basis, it doesn't do anything. So it's 10 June, right? So it's going to be next week. It doesn't do anything to the value of the business. What it does is that now the business, instead of let's say 100 shares, they're going to cut it up into way more shares. So instead of 100 shares, they're going to cut it up into 1,000 shares. So 10:1. Okay. But the share price will therefore drop. So you will see on the 11th of June, 10 June itself, that night, the NVIDIA share price will basically drop to 3 digit. Instead of 1116 right now, it will turn into what? It will turn into 111.6. Okay, let's say if the share price, let's say the share price is like that. Okay, right? It will turn into 100. Now, it will not change the fundamental of the business. It doesn't even change the technical of the business. But what it does, it changes the option side of the business. Now there are a lot more people that can do selling put options, buying call options, and stuff like that. Okay, so I suspect the options activity for NVIDIA is going to really go through the roof. Okay, all right. Zixuan, can't wait to learn these technicals from P. Yes, so I definitely want to share how I look at all these technicals. These are really important technicals. Okay, but having said that, guys, remember I never use technicals as my first indicator into buying anything. Everything comes from the fundamental angle. I want to look at whether this is a strong business in the first place. Is it a good business before I even think about technicals? Technicals is just the icing on the cake. Firstly, the cake must be nice to eat. Okay, then you want to go into to look at the icing, right? Otherwise, please don't look at it. Okay. Now, so what other companies we want to look at? Okay, so guys, you want me to look at any company, or I can share one. Let me see. Lulu, wow, interesting. Actually, recently I also just look at Lulu only. Okay, later I talk about Lulu. What else? What else? Palo Alto. Okay. Okay. Right. Let me see. Okay, got one, right? I recently got it from one of my students. Okay. So everybody now talks about NVIDIA, right? Even talk about Dell. Because NVIDIA and Dell did a I think a partnership, right? So their go to service is going to be through Dell. But there's one secret, so-called secret, what do you call it? Background behind the scene kind of company. Okay. It is known as Arista Network. Okay. How many of you have heard of this company, Arista Network? Okay. Type in yes. Right. Now, this is a company that basically does all the switches, all the connectivity for all your data centers, right? And right now, guys, if you are accessing, for example, ChatGPT, okay, right? Like you want to access ChatGPT, right? All these requires very, very fast access. Not just they need the data center, no. They need the access to be very, very fast. Right? Otherwise, your ChatGPT will take a while to reply to you. Right? So in order to do that, they need everything to be very snappy. And that's where Arista Network comes in. Okay. This is a business that I think potentially might be a better investment than just buying NVIDIA outright. Because once again, NVIDIA is a story that everybody knows already. Okay. And to me, therefore, it may bake in a lot of potential risks if everybody is chasing the stock. Right. I even recently, once again, on my Grab, right, I heard people talk about NVIDIA on Grab, Okay. I'm not saying the Grab uncle has no qualification now, but I don't think he's looking at the market all the time. And even he is already aware about NVIDIA, something to be concerned about. Okay. Right. So let's look at financials very quickly. Right. So if you look at financials, this is a company, right, with growing revenue. The revenue growth is not in the even before like the whole AI thing, right? They're already growing at like 30-40+% already. Right. So I'm really waiting to see what will be their results be. Okay, when's their earnings call? Yeah, July. Okay. So maybe a while more. Okay. But look at the earnings, it's amazing, right? Rapid earnings growth. And in fact, it already started growing in 2022. So it's way ahead of the whole AI talk. Okay. Very, very strong cash flow, right? Free cash flow also very strong. In fact, sometimes when I look at it, I'm like, your free cash flow is almost as good as your normal cash flow. That's nuts. Okay. Right. So very strong efficiencies over here. Margins are fantastic. Okay. So this is honestly not what I would expect out of a semicon business. Generally, semicon business do not look like this. Right. If you are into semicon business, you will know what I'm saying. The numbers don't look so nice. Okay. Then looking at valuations, actually to me the valuation is still pretty decent, EV EBITDA is about 30, right? EBIT SEM. Normal P is about 38. So okay, not too bad. Right? not crazy expensive, at least not NVIDIA level kind of expensive. Okay. So to me, right now, the way to play AI, the way to play semicon, right, is not to buy the obvious player. Is to buy the, the second in line, third in line, supporting actors, supporting actresses. Every time you go to the Oscar Awards, right, they'll say, oh, the leading actor is who. No, no, no. Please don't bet on the leading actor, because if the leading actor don't make it, and you bet on the leading actor, you die. Right? So what I like to do is I spread out my bets. I look at who are the secondary supporting actors, supporting actresses, Okay. Another one that I really like is also another A, which is AMD. Right? AMD to me right now, the TA looks really good. Okay. A little bit late, I would say, because the best entry point will be somewhere nearer here where this thing is red, this is low, and this is flat. Okay, now this is a bit higher, this is definitely high, this is definitely higher. Okay. But overall, is this still a better shape than like NVIDIA kind of through the roof? Definitely. Okay. And I was saying right now, if you look at the data centers, if you look at all the earnings report, NVIDIA is very supply constrained, right? It's not that they don't want this, they just cannot produce enough. And companies out there right now, they are not just waiting for NVIDIA for the H200, H100, right? All the chips are. If they cannot get an NVIDIA chip, if you are running your own business, guys, ask yourself this question. What will you do? You know that you need to get into the AI competition already. You want to start running your own data centers, for example, or you want to start running your own services, right? You cannot get the chip, but you need to set it up. What will you do? You don't get NVIDIA, right? What will you do? You go and buy the second guy, AMD, right? I would say AMD chip may not be as good as NVIDIA, but at least it gets it done. It gets the job done, right? It's kind of like if you want the change to an iPhone, right? Maybe you don't have the best iPhone, okay? Then you buy the not so good iPhone, or maybe you buy an Android phone. Can it still function as a phone? Yes. Okay. Right. So that is the key thing that I keep telling everybody, like, don't just focus on the clear winners, because the clear winners, if everybody knows, actually naturally it bakes in a lot of risk. Okay? Naturally bakes in a lot of risk. Right? So a way is saying no fish, prawn also okay. Yeah, in a way, in a way. But I would say this is it's not the no fish, prawn okay, It's no grouper, I go for snapper. It's still a fish. Right? I'm not developing a data set. I'm not totally abandoning data centers. So that's very important. Okay. Patron is asking how about Intel. Let's see Intel. Intel, yeah. Okay, Intel to me the problem is the chart. Valuation I think is fine, but the chart is this thing. It's horrible. It looks so bad. Like if the market is already running and you look so bad, right? The question I always ask people is if the market is, let's say, turns downwards for a while, what do you think this will become? Now is the semi-com bull market, and Intel look like this, Okay, so as you invest, try to understand you don't want to fight against the smart money. Smart money is the banks. I'm not saying they are right all the time, but they are the one creating the flow, right? They are the freight train in the market, basically. You don't want to stand in front of the train. Okay, that's the most important thing. Okay, let me see, got any other shares you want me to talk about? Okay, Lulu, Lulu. Okay, wow, interesting, Lulu. Okay. So Lululemon, okay, I think this brand, the ladies will be very familiar. This is basically your athletic, they call it what? Athletic leisure wear. Okay. How many of you all here wears or have a Lulu product? Raise your hand. Okay, I also have. Recently I bought one of their pants. It's very nice, very nice to wear. Okay, so right. So Lulu also got very bad chart. Very, very bad chart. Okay. But one thing I like about Lulu is that when I look at the Lulu fundamentals, okay, right, let's look at financials. Okay, right. Can you see this is a business that actually is coming along quite nicely, right? This is a yearly chart, by the way. This is the annually, okay. It's increasing. Let's look at some more. Income also increasing quite nicely, right? If we look at quarterly, okay, so today we're down another 2%, okay. Okay, if you look at quarterly, oh dear, it's loading for a while. Okay, maybe I shouldn't have clicked quarterly. Okay, let me just click valuation first. Okay. Okay, I think quarterly can already. Let's try. Okay, great. Okay, so if you look at quarterly, the revenue, yeah, revenue keep on increasing one. Although the percentage is not so high lah. Okay, right? Gross margin is at about 50+%. So whenever you buy a Lululemon pants, like I bought their pants already $100+ over dollars. I think the cost is $50. Okay. But that is the margin they can command. I think that's the important thing. Okay. Net income, great. Okay. And if you notice one thing, the outstanding shares has been dropping and dropping and dropping and dropping and dropping. I think a lot of people don't notice this. The outstanding share count is dropping and dropping and dropping. Is that a good news or bad news to shareholders? I want you to think about it. Okay? Right? Okay? Now, cash flow, very inconsistent cash flow, I must say. Okay? Very, very inconsistent cash flow. But if you look at it from an annual basis, it's not so bad. Right? From an annual basis, the cash flow actually looks pretty good. But from a quarterly basis, it fluctuates a lot. So this tells you the difficulty of this business is that they are very inventory heavy. If they manage to clear the inventory, suddenly they got a lot of stock, right? They got a lot of money. If they cannot clear the inventory, then suddenly the cash flow can be a bit tight. So that is one thing that you definitely should look out for if you are investing into Lululemon. But I like the free cash flow. Oof. This company is flooded with money. And when they are flooded with money, there's only two things they can do. One is they reinvest or they give it back to shareholder, right? So give back shareholder, there's only two ways. Either you declare dividend or you buy back shares. And one thing they have been doing is very, very clear is buying back shares. Okay, right. So this is Lululemon. Let's look at valuation. Right. I would say the forward PE is very undemanding. Okay. Enterprise to EBIT 14, 12 times, price to sales 3 times. Right. This software, I love it because they give you graphical presentation. So you can look at 5-year chart. Wow, the valuation has come down a lot, from previous high. So actually, I like it. It's coming back down to the so-called like the previous lows already. Right? This price to sales. What else do we want to look at? Price to book value, right? Price to book value has been dropping as well. Now we can overlay or you can turn it off, right? Price to book value has been dropping off. 5-year price to book value, actually, this is almost at the previous low already. So I love it. I love it that Lululemon has come back down. In fact, looking at the valuation, I believe, right, what we are seeing right now is something like this. We want to see the share price, okay, go back to the 2021 kind of level where it's kind of undervalued, right? That's what I'm seeing. That's what I want to see, okay. Otherwise, I think this is a very good business fundamentally, but the chart looks a bit shit, okay, right? So definitely, if I want to do TA, I'll be very honest, don't know where to draw, maybe here, right? So I definitely want to see a proper bounce, okay. Then I want to go in for a bit of action over here, okay. So that's Lululemon. Okay, maybe I talk about one more before I need to go, because I promised my friend I want to talk to him at 10:30 on. Any other stock that I didn't look at? Okay, Kenny says Palantir. Okay, so let's look at this one. So a lot of people talk about. I honestly don't really like this business. Simply because I don't understand the business. And mind you, I come from a military background, So, so, so I can tell you if I have difficulty understanding the business of Palantir, I think many people might have the same issue. Okay, but nevertheless, let's look at it. From a chart angle, I think it's fine, right? Proper uptrend. This is very in line with the broad market. Okay, very, very in line with the broad market. If I look at money-wise, okay, let's look at money, Money. Okay. Right, look at financials. Okay, let's look at quarterly first. Yeah, the quarterly financials, they take a while to load. Don't know why. Let's do the trick. Okay, it's here. Okay, right. Okay. So no need to go too far back because I use the paid version. If you want, you can just look at the first few rows. Right. So you can see revenue gradually increasing. That's the good sign, right? Operating income, it was very bad and then they become better. Okay. So that's a good sign. Right. So these are great. These are things that you definitely want to see. Cash flow wise, I would say cash flow is okay, kind of flattish. Right. If I look at ratios, that's where I'm like this business, because it's such a high margin business. But if you look at the efficiency, ROA, ROC, ROE, ROCE, common equity, all can't make it. Not very good. Okay, so right. The only thing is that this business has very low debt. right? So the odds of this business like kind of going belly up and not gonna make it is not that high, I would say. Okay, right? I think it's gonna survive along. But if you look at valuations right now, I would say the valuations is a bit high, right? EBITDA about 46, 47. Okay, right? If you look at price to book, even if price to book is at a pretty high level as well, 12 times price to book. Okay, so I don't really know the business very well. I tried to read into the financials, but I cannot convince myself this is a business that I want to buy. Okay, but since you asked about it, let me just share with you all very quickly. Okay. Okay. 10:25 already. Any more question? This is very impromptu, I must say. Usually I want to do live, I will prepare a bit, then I will share some things that I want to share. But this is a bit more impromptu, so I don't really have something that I wanted to share with you all in particular. Let me see. Any other things I want to share? Any other big run in the market right now? Let's see. Okay. Got one. Okay, recently, I don't know, are you all like runners? Okay. So this company is known as Decker, right? I don't know whether you all know of this brand, but basically you might have heard of this brand called Hoka, right? Hoka is a very famous running shoe right now. Okay. And Deckers is the parent company. And after their earnings call, basically they talk about the shoe and they say they give us some hint about like going forward. I think we're gonna like blow all the expectations out of the water. Wow, the share price just whoosh. Right? So hey guys, this is the type of business that maybe I would say more people should look at. Right? You know why? Because this is the business when I tell my students, right? The first reaction they have is P, oh my gosh, it's $1,000. Okay. Back then when I talk about it, because I love the Hoka shoe, right? I run with them and stuff. I know how good they are. When it was like $800, when it was at this support level, when I talk to them, you know what's their reaction? They say, wow, P, $800 per share. So expensive. I'm like, huh? Expensive? Why? Why do you think expensive? The price of the share price tells you nothing about whether it's expensive or not. Nothing. Zero. Okay. So do take a look at this business. This business, you cannot really screen through like just looking at ticker.com because it is a business that is very unique whereby that particular shoe is basically lifting out the whole company. Okay. Right? That particular shoe is bringing everybody to heavens. Right? You can see the revenue just really started soaring, right, when Hoka shoes came into the scene about 2 years ago. Right? Cash flow has been super right? Insane cash flow, right? Their efficiency suddenly from 2022 started increase, right? Now it's got 40% ROE, right? This is the kind of how to say this is the kind of things that Nike will be very jealous. Right? This thing can also compare with let me see am I correct? Yeah, you can compare with competitors, so you can see Deckers over here, Nike's over here, right? So right now, evaluation wise, yes, Deckers is definitely more expensive. But if you just look at Nike in terms of their ROE and whatnot, actually, Deckers is looking a lot better as a business, right? I love this company. I have some shares, not a big exposure because I still feel that consumer discretionary products like running shoe can be very seasonal, but the quality of the shoe is very strong and it really shows in the sales, right? The fundamentals of the business. So this is something to look at. Of course, right now, would I go and buy myself looking at the TA like this, right? This kind of RSI, this kind of stochastics, this kind of webby RSI level? No, lah, definitely not. The histogram is way too high. It shoot up way too high. Okay. So for those of you who want to learn TA, what I look out for is usually a support. Okay. Right. Okay. Usually a support. I want to see the MACD is good. I want to see the RSI and I want to see the stochastics low. And the Webby is something that I recently added. Okay. This is a histogram type where it's like an RSI, but it really tells you like when it starts to run. Okay. So you can see the activity started to shoot up. But we want it to stay within this green area. So once it goes to the red, wow, time to like hands off. Yeah. Okay. So this is a bit more complicated. But if you just want to learn, usually I look at these four. So Zixuan was asking, right? Okay, so these are the four that I'm looking at. Okay. All right, great. 10:30 already. That's all I wanted to share with y'all. I will definitely be looking at more of such session, right? In fact, I'm definitely launching a community, right? Because I realized I've been focusing a lot on property in the last 2 years, Okay. And I'm kind of like not shared as much as I wanted to on the stock market side. So I think it's something that I want to redo again. Let me know if you all like this kind of format or how you all would like the live session to be. Anything in particular you all want me to run through. Let's make this iterative. I will do different session, different style, and you'll just vote. See which one you all like. Okay. Right. Then we can run this as a community. All right. Okay. So that's all I wanted to share with everybody. Have a good night. Don't stay up too late. Okay. Invest well and stay safe. Bye bye.